Good morning, everyone, and welcome back to the market review. And today I will review the day of 12 March 2024, which is the Tuesday chart. The reasons I will review the Tuesday chart is because only Tuesday have give me a setup during the AM session time. So let's go into the charts and I will break down the charts for you. But before that, for the this week, the market is kind of choppy. So the market is not in a trend. I couldn't predict uh, how the market will be, where the market will go. This If I couldn't predict a market, I will trade based on the time, the New York time, with the trading indices Nasdaq 100. So let's begin. In the daily charts, my eyes was the sell side liquidity, the equal low resting below, because the buy side liquidity is sweep. So my prediction will be I wanted to see the markets to go lower to take out the equal low, the sell side liquidity resting below. While because that during Monday the market did not show a very strong bearish and it keeps choppy during in the same place, starting from Tuesday 29 February until Tuesday March. The market is still chopping around the area. While the market has swept the buy side liquidity, I still couldn't predict where the market is going. If that's so, I will go trade based on time. Let's go into the 1 hour and 50 minutes to see the where does the market wanted to go during the time. As always, I will change my time into the New York sessions. The reason to change to New York session is that because New York is the main in the US market. That's why you need to change the time to New York. And I do some research that shows all the stock exchange is all mostly located in the New York City. And ICT have taught me that you should always use New York operating time. If not, your trading will not be successful and you'll be lost during the time. Now I have drawn the New York opening time and New York closing time. As what we can see in 1 hour is that the market is choppy during the Asian and London sessions. I couldn't see anything, but I can see there is a sell side liquidity here and a sell side liquidity in the daily price where I just draw. Now we go into the 15-minute charts, and this week I have taken some losses, lose trade, because I made my mistake during this week so many times. Now I will tell you why this mistake is you need to avoid, because if you avoid this mistake, it will help you to determine how the market wants to move during the time you are going to trade. My personal time to trade is after 9:30 to 11. I will find the setup during that time. If the market has run to the liquidity sweep during the higher time frame, never mind, I will show you later. Back to the charts. In 1 hour, there is nothing here. I do not see anything. Now I will go. I can see is that here has a sell side imbalance, the fair value gaps. Imbalance, and I want if the market do not want to go lower, I would want the markets to go higher into the imbalance, sell side imbalance, and it will continue to go lower to sweep the lower sell side liquidity. It is caused that the buy side liquidity is taken. I do not want the markets to sweep again, because in daily the market has a lot of equal lows below, resting below. This is a target for the smart monies to attack on. So I do not want to see it go higher than the buy. So if it goes higher than the buy, so means the market is going more bullish than I thought. So let's go into the 15-minute chart. Right now in 15-minute chart, during the 8:30 a.m. until the 11, I will find the liquidity sweep or the market structure shift where the market is wanting to go. Now in 8:30, the market has a very weak here. Tuesday is, if not mistaken, is a CPI day, which you can see there's a very long weak manipulation down. And after that, in 9:30 to 9:45, the market has swept the sell side liquidity. There are so many liquidity here, sell side liquidity. 15:45, 11 March, 1:30 and 11:30, and also the 10 a.m. All this sell side liquidity, I'm focusing on. I want to see the market to sweep the sell side liquidity below, because in the daily there's so much equal lows there. I would want the markets to continue to go lower without going higher. But then I was wrong during that time. I took a loss, but I will tell you why I took a loss during that time, and the importance of using the 15-minute and 1 hour charts. The liquidity sweep is more important to see the liquidity sweep in 3 minute or 1 minute. Using the higher time frame is more stronger to determine your bias than the smaller time frame, because smaller time frame is not as accurate where the market will go than the higher time frame. So you need to practice yourself to see the higher time frame rather than the smaller time frame. The smaller time frame is when I want to do my executions. I will go into the small time frame to find the precise entry. But right now, I want to show you where I made my mistake and where what is the setup and where you should execute during the Tuesday, 12 March 2024. Let's go into the 5-minute charts. Inside the 5-minute charts, the market has 9:45. The market has swept the liquidity, and then in 15-minute market has swept one of the liquidity. And then in 5 minutes, we can also see that the liquidity is sweep, but I can see there's much more liquidity the market will want to sweep. So I decided to go a small after the liquidity sweep. I want to see if the market wants to continue to go lower to sweep another sell side liquidity, but I was wrong. And let's go to the 3-minute and 1 minute to see where I execute and I get taken and get sweep by it, take my stop loss, and I took a loss during the time. Now I'll go into the 3 minutes. In the 3 minutes, I can see in the 9:39 there is an order block and a break lower and lower during 9:45. After the sell side liquidity is swept, I expecting this order block will reject the market from going higher, because the 3-minute the market has shown very strong displacement lower, and there is a liquidity, sell side liquidity very near to be swept. So I expecting the markets to sweep more of the liquidity before it reverse going higher. Now I will teach you how to using the 15 minutes time frame to determine if the liquidity is swept. Should you continue to shorts during the time? If the sell side liquidity in 15 minutes is swept, you need to be careful. Maybe the market will continues to go lower, or if it reverse going higher during the time. If you want to see the markets to continue lower, you need to have a confirmation of the first is the order block in 3 minutes or 1 minute, and the market structure shift in the smaller time frame, and also the liquidity sweep in the smaller time frame. Only that you can go continue short. After you see this confluence, you can be very confident that the market is willing to go lower. If not, if you don't see this confluence during the time after liquidity sweep, you shouldn't continue to go short. You have to wait. How does the market react, or you need to wait until the confluence, which is where the three confluence I just said. Only you continues to execute your short positions. Now I will go into the 1 minute chart. Inside the 1 minute, after the 9:48 or 9:45, the market has swept the liquidity in a higher time frame. I am waiting the markets to go short again and to take out some liquidity. So I execute in these fair value gaps, and then my stop loss get hit because of I did not follow my confluence, which you do not see any order block above here. You don't see any order block or anywhere that the market is not willing to go any higher, and then the market structure shift you see. This is just the order block where the market has created, and the market just direct to go continue to go lower and sweep the liquidity. That's the losses that I took for the Tuesday, and I also made a mistake during the Thursday. In Thursday is the same as Tuesday, because in the higher time frame in Thursday, the market has already swept the sell side liquidity in higher time frame. So I keep I will keep predicting the market will continue to go lower, but I did not check the three confluence, which the order block, market structure shift, and liquidity sweeps during the time. So I ended up losing when I going for short position during the macro time, because I'm confident that if there is a macro time, the market will continue to go lower after it reach the fair gap and continue to short. But you need to remember that the order block and liquidity and market structure is very important in ICT concept. Now I will go back into the chart where you should executing. After the liquidity is swept, the market has reversed higher and higher until it breaks this 940, but this is not the swing high I want to see. I want to see it breaks this breaker. This is the breaker, and this is just I don't see any swing high. Swing high means I want to see the candle to left to the right, and the middle one and the wick long. This is the swing high I want to see, and this is the breaker, because it sweeps the sell liquidity and it breaks the breaker, the high of the breaker. I will go into 3 minutes. Give me some time to find the setup. Okay, this is where I want to see the markets to go higher to sweep the buy side liquidity here. Wait, buy stops, and this is the target I want to see where the market will attacking on. And then in 3 minutes, the market has swept it, but it did not sweep the high of this swing high, but it breaks the breaker, this 4 candle breaker, and I'm confident that the market is going higher. This is because the sell side liquidity is taken, and the market reverse going higher, and it breaks the breaker, the body of the breaker, but it did not bring the swing high of the breaker. But I can already know that the market is going higher to take out the buy side liquidity on the top. In the time, there is 2 entry you can enter. The first one, you can enter your execution in here, the 10:03, the macro time, and another one is the 10:18. The 10:18, the market did not reach rebalance into the fair value gap, is because there is an order block here. Order block means if the market is bullish, the market will slightly touch the order block, and in reverse, the market did not need to retrace back into the fair value gaps here, and it will continue to go higher to sweep the buy side liquidity. And the reason I did not take the execution in 10:18 because of my psychology, because in the first trade I took a loss, and then my mindset is telling me that I do not want to take a loss anymore. So I am hesitated to take my execution here, although I already know that this is the best execution where I can execute to go long. In the end, I did not take any trade during 10:18. My mind is I'm fighting with my mind that I take this trade during 10:18 after it touched the order block, and in the end I did not take. But this is such of my psychologies, and now I'm practicing my psychologies of losing losing psychologies. I hope I can be more stronger in the futures in trading. If there is a good setup, I should not care about the previous losing I have taken. I will continue to trade one more times if I see the conference I saw, and I will take the execution immediately without hesitation. If I hesitation, the market has already run to your target, and uh, you will find that you feel pity because you have missed the opportunity to recover back your lose. And today is the Tuesday market review, and I hope that I learn from this mistake and keep going on. I should not be fearful about my losing and my money in my account. I will trade based on what the market show me and be confident to hold and let the market runs to my profit. If I saw the opportunity, I will uh, give me a chance to let the market to run to my target. So I will talk to you guys soon. Take care. Bye.